Hi, how are you?
Pretty good, Mathilde. How are you?
Yeah, very well, thanks. Thank you
Okay,
for accepting to participate to this webinar. I really appreciate it.
sure, sure, no problem. It's a pleasure to be here and chat with you for a little.
Thanks so much. Do you mind giving us like a little bit of a background about yourself and how you ended up being in commodities, please?
Sure. So, my background. So currently, I'm running a macro trading strategy that's kind of commodities focused. Even though we also look at other asset classes like equities, rates, and so on, but very very much so commodities focused. And my career kind of started a little bit differently than most people in the sense that I didn't really start immediately in the commodities. I was on the macro side. I was in financial markets. Worked actually as a fixed income junior portfolio manager in the early as my career. Then I ended up transitioning into commodities at some point. Probably like time flies. It probably like 13, 14 years ago now. And I've been involved on both the physical and the financial trading side of the business, even though my focus now is exclusively on financial trading and commodities. Having had a little bit of physical experience has been helpful in really understanding the microstructure of the commodities markets and how that particular cohort of the market looks at the market. So that's kind of my background in a nutshell. Education wise, you know it's one of those industries and professions where it really doesn't matter kind of what kind of educational background you have, as long as you have the some great analytical skills and really the determination to really learn and really the personality to be a markets person, because not a lot of people can be very smart but they just don't have the right mindset or the right makeup to be traders, because there's a lot of emotional intelligence and kind of risk management, stress management also that comes along with that. So that's also a skill that some people lack, and it just doesn't make it a good fit for them career wise. So um, yeah, that's kind of what I can tell you about myself in a nutshell as far as my background is concerned.
That's really interesting because actually a few weeks ago I put on a poll on LinkedIn asking what is what do people prefer? Is it to have like the right skills for a job, like the right mindset, or is the
Hmm.
experience more important? What do you think about this?
You say what's the most important thing between having the right skill and having what?
Right experience.
Um,
Like when you recruit for your team.
Gosh, you mean experience as far as academically, or
No,
experience in terms
I
of
mean
work
like,
experience?
yeah, in terms of work experience.
Well, I don't think one is more crucial than the other. I think the skill set is important, the experience also is important, but you're not going to come right in with a lot of experience, right? I mean, it's just experience, just something that just comes with time and exposure. So you can have the right skills but not having the proper experience yet, and it's not because it's your fault or you just don't have the ability to acquire that experience. Experience just takes time and takes the right opportunity, right? So I think both skill sets are important. um, Obviously, I think as you kind of mature in your career and you start you know um, becoming more senior, I think experience definitely plays a huge role, because markets are not similar but they tend to rhyme. So having a good knowledge of market history, having the ability to refer to past instances in the market and trying to see similarities or dissimilarities with today's market is very important. So you can have a trader, for instance, that's not extremely skilled, say technically speaking, but has the ability to tap into his or her market history and make connections to what's happening to the markets today, and that can make him an extremely um, valuable and good trader at certain points in time. Not always, but in certain regimes, the way markets tend to rhyme, traders with that kind of experience tend to benefit a lot. But I think when market are less rhyming, so to speak, and you really got to come up with more creative strategies. I think having the technical skills to be able to trade or then become more valuable. So yeah, I wouldn't necessarily say that, you know, one skill is more critical than the other. I think having both is ideal. And so I think most people should strive, just try to have both, you know, be technically savvy and try to gain as much experience as you can over the years. But that takes time.
And in terms of the skills needed, so you were saying stress management. Are there any other skills that you can think of? Hardworking, obviously, I think. Open-minded. Are there any others like that stick out?
Any technical skills or soft skills, would you say?
Soft skills.
Soft skills.
And then we'll get to technical skills because I think they're important as well, obviously.
For sure. So soft skills, obviously, like I said, you know, discipline, which kind of, you know, in my opinion, correlates with risk management, because having a sound risk management process requires a lot of discipline. Because you could construct a process, but implementing that process actually requires you to be very, very disciplined and regimented. So that's definitely a clear soft skill. I think mental toughness, stress management, those things are connected, right? Having the ability to, you know, not get rattled, stick with your trading plan, keep your emotions in check, those kinds of things. I mean, those are things that are very well known as being key attributes to successful traders. So I'm sure I'm not really, you know, teaching anything new here, but those, I just want to kind of reiterate that these things are just as important as having technical skills, because a lot of times you could have a great analysis, but you just make a bad decision, and that bad decision could be coming from a bad emotional or stress management at that particular time, and it could be very costly, right? So those two things come hand in hand. Now, technical skills, I know that was your next question. I think you know, having the ability to think analytically, having the ability to be good with numbers is very important. Obviously, I mean, you're dealing with money. Let's just face it, a lot of money, and you're dealing with, in a case of you know, financial traders, for instance, sometimes you're dealing with pretty sophisticated, you know, financial instruments like futures and options and all sorts of structures around those instruments, and that requires a minimum amount of, you know, technical savviness to be able to manipulate these instruments and understand how they're modeled and things like that. So that's important, because there's one thing to understand the market, but when you're trading a market, you have a market that you need to understand. Then once you understand it, you need to have a trading view. And once you have a trading view, you need to be able to implement that trade. And you can have all those things right, meaning you're in the market, you have the right view. But when it's time to put on the trade, if you're not technically savvy to know how to use certain instruments and understand the risks that are underlying these instruments, you know, you could blow it all up. You know, you've got step 1, step 2, step 3 correct, but the last and most crucial step, you mess it up because you don't have the right technical skills to understand the instruments that you're dealing with. So that's very important. And in the case of more guys that are trading more on the physical side of the business, I think understanding, you know, other aspects of the business that are considered sort of support functions, like, you know, if you're a physical trader of, say, crude oil, having a good understanding of, you know, operations, having a good understanding of risk, having a good understanding of even compliance and legal, because a lot of things are based off contracts. So you could be a trader and say, hey, my lawyer says this, or my compliance guy says this. Great, that's their job. But it's even better if, as a trader, you can understand what those risks are, so that you can flag them to the specialist, right? Like sometimes you could be in a deal and you're the trader, you're the one that actually at the end of the day understands the deal better than anybody else. So sometimes your compliance guy or your legal guy could be missing something, right? Not because they're not good at their jobs, just because it could be something slipping because they're not, you know, sort of in the forefront of running the deal, right? So you having the ability to know where certain risks could potentially lie as you go through the deal process allows you to reach out to these guys and say, hey, I'm a little concerned about this. Can you double check this? I'm seeing this. Can I get a bit more legal advice or compliance advice around this, right? So you need to be able to understand those things. So those skills are kind of required. from a trader as well. You're not going to be a compliance specialist. You're not going to be a legal specialist. You're not going to be an operations specialist, but you got to have a minimum level of knowledge across those different functions to be able to do your job well.
And that's something that you learn on the job, obviously as well during the studies. But I mean, for
Yes.
example, you did the transition and went into commodities. And actually, I was wondering, how did you go into commodities and why did you choose commodities?
That's actually a good question. So why and how? So let's talk about why. I think for me, I was quite intrigued when I was a macro analyst and junior PM. You know, the fund that I used to work for had exposure to all sorts of asset classes, bonds, uh, particularly bonds. That was a kind of a bond specialist fund, and a lot of what we did were to look at bonds from what's called developed markets and also emerging markets. And a lot of emerging markets, looking at their bonds required the ability to be able to understand commodities, because a lot of emerging market countries are either big commodities producers or they import a lot of commodities, right? So I started looking at that, and I started getting a bit more exposure to commodities from that angle, more so from a bond investor. And it was very intriguing to me when I realized that what's very different with commodities versus, say, equities or interest rates or whatever is that commodities are an asset class that you can trade just like trading a stock. But at the end of the day, they're also a physical commodity that gets delivered. Mm-hmm. And I found that to be very intriguing because I felt like it was more tangible, much more exciting with all the operations and all the logistics that are involved with it, in addition to the financial trading. So that's what got me excited about it. And I ended up making a transition into commodities. And how did I do it? I think this is how I did it, but I don't think it's the only way to do it. Most people, would probably go through kind of a traders training program, or go through the kind of operations route or risk management. There's a couple of sort of traditional ways that people get into the business, but for me it was a little bit different, because I came from more of the finance side of things. So I came in with kind of more financial knowledge, and the idea when I first got hired, my first job on the commodity side was with Beetle back in London. And they got not to necessarily sell Beetle here as a company, but they were kind of very open-minded in the types of backgrounds that they were looking to bring in. So they just didn't want to have people coming from training programs from the big oil, like the BPs and the Shells or whatever. They had a ton of those, but they also wanted to have people with kind of different backgrounds, as long as you have great analytical skills, great commercial skills, and just the hunger to work hard. Because this job is, as you know, very demanding, lots of hours, stressful. So they look for people that have that kind of makeup. And they took a chance on me, just like they did for a lot of kids. And it's one of those things where you see a lot of people that come in, they try for 2 years, and they're just like, it's not for me, because either working too hard or it's just not my cup of tea. And that's fine too. And they know that there's going to be you bring in a pool of 100, let's call it, and after 2-3 years you're probably left with 20, and they know that. But that's kind of the goal, because they want to make sure that they squeeze that juice, the people who really belong here and really want to make a career out of this. And that's kind of how I made my transition. So that being said, I think the takeaway here for people that are aspiring to get into this is there's really no set ways to get into it in terms of the background and the technical skills that you bring it in from day one. It's more so, well, you need to have kind of a baseline level of technical skills, but it's all about really your makeup and your drive, and your commitment to want to learn, how keen really you are to want to learn it. And I think it probably requires you to have a certain degree of passion for it, because sometimes you might be tired. It's working long hours, working on a couple of stressful deals and stuff. But the ability to push through really comes from the fact that you kind of like it. You gotta like it to a certain extent. You know what I mean? So, yeah. That's
Yeah, it's
really
an exciting job. I mean, you spoke about stress and hard work, but there's also
yeah.
like the other side of a coin where it's in a super exciting position to be
Yeah,
in.
yeah, it's super exciting. I think, it's very big. I think, from a just professional achievement standpoint, I think it's an ever moving market. No 2 days are the same. I always tell people we're very fortunate to be in a profession where you get up in the morning and you're pretty much guaranteed to get some excitement. Could be positive excitement, could be negative excitement, but you're not going to get left at 37 degrees Celsius temperature, right? Like it's always going to be movement. It's always going to be a lot of action. It's very dynamic. It's also a career that, by and large, is also pretty financially rewarding for people who do well. That's another incentive because, yeah, frankly speaking, I've seen people that would tell you that the number one reason for them to be in the industry is because they can't really find anything else where they can be that can be more financially rewarding. That's another reason why, some people also look into this. I'm not necessarily saying that should be the main reason, but it does come up as a reason when you talk to people and you pull them out. Sometimes that's the reason that you're here. But I wouldn't advise people to look this as the primary reason because the fact of the matter is, like I said to you, it's not everyone that makes money. And in a way, this market or this industry could almost kind of be a bit of a zero sum game in the sense that when someone is making a lot of money this year, some probably losing money on the other side of it. So, it's no layup, it's no guarantee that you're going to be very successful financially, right? So if that's the only reason to get into the business and the industry, then I think you're in it for the wrong reasons.
Okay.
So
And what commodities do you trade in general?
in general, I trade. So our bread and butter, my team trades crude oil and obviously all the um, derivatives and products that are associated with it, and gold. We also have a couple of guys that look into natural gas. That's kind of our bread and butter. I mean, we could opportunistically look at other things, but those are our sweet spots.
Yeah, super interesting. May I ask you what the market is like at the moment?
Which market in general?
Oh,
The
yeah, in general.
the in general, I mean, there are a couple of different themes that are at play right now within commodities. Right? I mean, oil has been kind of stuck in a bit of a range here, I think, since the Trump administration came in and has been super hawkish on oil, meaning that really pushing a rhetoric that's aimed at pushing the price of oil down, because obviously it's an administration that ran on bringing prices down in general here in the US because of the inflation problem that we've had over the last couple of years. And on the flip side, you've got OPEC that's still holding on to barrels. So it's kind of like, it's hard for the market to sell up too much. So we're kind of stuck in a bit of a range here. And over the last couple of weeks, it's been very, very vulnerable to just headlines. We get a lot of headlines from the new administration because they're still coming up where they're still basically fleshing out their policy agenda. So it's from one day to the other is just headlines up to headlines. So it's a little bit choppy to trade at the moment. So that's really kind of where we are with oil. Gold has been an interesting one as well. There's been a huge amount of flows going into gold recently. Some of it is attributed to sort of people hedging around all the uncertainty with the Trump policies and tariffs, etc. But I think there's a bigger story behind that, which is I think a lot of central banks are really buying gold as a structural asset now. I think since the war, the Ukraine Russia war started, and Russia had its assets frozen. I think a lot of banks, central banks, were like, well, we got to make sure that we're not vulnerable to that kind of situation if it ever happens again. So the best way to do that is just to try to hoard as much gold as possible. So we're seeing a huge run up in gold here recently. So we're also kind of that's keeping us busy a little bit, but things don't go up forever, and we're kind of watchful on potentially things cooling off and pulling back here because there's been so much money going into gold at some point. Even if the market is structurally bullish, you might get these pullbacks, in the interim. So we're kind of keeping an eye on that to make sure that we're not, overexposing ourselves there. So those I think are the main plays, are the main themes really that we're keeping an eye on the commodity side.
Where do you see the market going, like in the next year or so?
Um, I really think that there's a chance that we go lower on it with oil, simply because I think China has continues to show signs of weakness. I think the Trump administration is fixated on making sure that oil prices stay low, but I don't think we could go, you know, to levels that would be punitive to big oil here in the United States. When you think about shale oil, a lot of people think $60, maybe $65 on WTI is kind of the floor. But I think there's a risk that the administration continues to put pressure on stakeholders in the oil market to keep prices low. And we're also hearing that obviously we're still waiting for details, but they're working on some policy frameworks to allow production break evens for big oil to be to decrease probably by anywhere from $5 to $10, so that they can break even at a lower price. So if that's successfully implemented, and given the macro concerns around China, given that OPEC has really got a ton of spare capacity, it's really hard for the market to rally. And I think it's hard for a market to just stay sort of flat. At some point, it's going to break out either higher or lower. And the reason why I think we could go slightly lower is that the breakout to the upside is it's not really a high conviction trade, because if you look at what Trump is doing, he's trying to de-escalate a lot of the geopolitical stuff around the world. So that means that all of the geopolitical risk around the Middle East, around Russia, all that risk premium might have to come off the market. And OPEC's got a ton of spare capacity. So even if we see a bit of a rally, OPEC is probably going to release more barrels to the market. So, and people know that this is not rocket science, right? So it makes people very nervous to want to play oil from the long side, because it's like, well, if we rally and OPEC releases, then we're going to come off again, right? So I think we're in a bit of a range. We'd probably tilt this slightly to the downside as we get into later in the year and 2026.
Does that keep you up at night?
Well, it does. I think if it doesn't, then you're not really taking your job seriously. I think it keeps everybody at night. And the reason it keeps you at night is because you have to constantly challenge your views, right? Like, even if you have a view, sometimes you have a higher conviction view where you're like, yeah, I really, really believe this is likely to happen. But even when you do, it's never 100% conviction, right? It's even if when it's 80 or 70 or 75, it's still, you still got to be watchful for whether you're missing something. Is your analysis as comprehensive as it should be? And then also, like I said, we have all these headlines. Things can change on the dime, especially with a super sort of unpredictable administration like the Trump administration. They can come up with anything at any time that could just move markets $3, $4, $5. So you have to be watchful for that. So yeah, it does keep you up at night to some extent. But again, to the point I was making earlier in our conversation, I think the key really is about risk management, right? Having the ability to be tight on risk management, having some tight stops, if you have a trade on, having some clear exits and entry points, obviously, and have the ability to, to cut your losers when the tide turns against you. And that's really all risk management. That is not skill, right? Like, if you're wrong in the position and you get out in a disciplined way, that has nothing to do with being a math whiz, right? You don't need any college degree to do that. It's just discipline. But it's a key trait of being a successful trader.
Wow, super interesting. So I've got one last question for you. And
Sure.
what advice would you give to people wanting to go into commodities, or people wanting to have a successful career in commodities?
That's always a tricky question, right? Because I feel like everyone's situation is sort of different. Everyone is coming to this for different reasons, etc. But I think my main advice would be to really take the time to learn the business. Sometimes, you know, people are could be impatient to get to the seat that they really want, right? And everybody gets to different seats at different speeds. But it's all about making sure that you're ready when your number is called, so to speak. When the right opportunity comes along, you want to be ready, which means you need to be a student of the markets, right? I think having great knowledge of market history is very important. And you don't, and today with, you know, technology and the ability to research and even chat GPT and all that, you can really have all that information, right? Like I can talk about, you know, the oil embargo of the 70s. I wasn't born in the 70s, but I know that history just like as if I was around, because I studied it, and I'm sure that I understand all of the dynamics that took place during that time. So I think that's very important. I think that's the number one thing to me is you got to have great market history. And as you start off is just trying to trying to hone every skill that you can, especially around different functions of the business, understanding, especially if you're on the more physical side of the business, like I mentioned earlier, try to understand everything that's around it, because a lot of times, you know, you're in a profession where you're dealing with millions of dollars, right? So there's really not much room for, you know, for big time errors. Like if you work at a bookstore, all right, and you do something wrong at work, maybe you know you dropped a shelf of books, right? Or if you work at the cashier, maybe you rung it up wrong. Instead of charging $100 for the book, you charge 50. That's not really going to change anything. It's not the end of the world. But in this business, one mistake can cost $2-3 million, and so like you have to limit the amount of mistakes and also the magnitude of mistakes that you make. To be able to do that is to really take the time to understand as much as you can, because missing just one thing could cost you not $50 but 5 million, right? So really taking the time to learn and just wait for your opportunity to come, and when it comes you just need to be ready. Right, that's my advice.
Amazing. Thank you so much. Thanks for all this insight. And, you know, it was such a pleasure speaking with you today.
No, likewise.
Thanks for the tips as well. And
Sure.
yeah, let's stay in touch.
Sounds good, Mathilde.